Hey everyone, welcome into today's webinar. My name's Nick Child. I'm the Director of Customer Experience here at Harris Federal Employee Law Firm. We're really excited to have you here as we talk about survivor benefits and give you a little insight into how those can affect federal disability retirement. Before we get started, just a couple notes here. We have some team members that are on here with us that are going to be answering questions. So if you look on the side of your screen, or if you're on mobile, there should be a black button at the bottom of your screen where you can pop out the chat box and feel free to drop questions in there, and we will answer those as quickly as we can. If you have specific questions, they might suggest giving our office a call to do a free consultation, and that is really beneficial to you. A lot of these benefits and the specifics of benefits, you really need to talk to a professional about in the context of your situation so that you know what that looks like. So with that, we're going to get into this webinar. I want to welcome Bo Harris, the president of our law firm, and he's going to talk through some of the details about this benefit with us. Bo, welcome in.
Hey, thanks, Nick. I appreciate it. Glad to be here today.
Yeah, so Bo has been doing this for almost 2 decades now, helping federal employees with their benefits and get approved for their benefits. And so today in this webinar, we're going to cover one detail of the federal disability retirement benefit, which is the survivor benefit option. So first, we're going to talk a little bit about the federal disability retirement annuity and what that is. Then we're going to get into the different types of survivor benefits and those options, and then basic and monthly benefits, and then who qualifies as a survivor. We get these questions a lot because this is a really important topic as you are applying for disability retirement, electing those options and knowing the best path forward for you. So let's get started. Bo, the first thing I want to ask you is, why is this benefit important?
Thanks, Nick. This benefit is complex. I think that's the first thing to understand is as a federal employee, when you're making retirement elections, you're going to be faced with a lot of complex decisions. Survivor benefits, just in general, are usually misunderstood, and you need to make sure that you understand them, because if you don't, you might be choosing something unnecessarily. A lot of people think to themselves that survivor benefits are something that you should do because it's the right thing to do. It sounds like it would be the right thing to do to leave some sort of benefit for your surviving spouse. That sounds great. I think everybody would agree that sounds really nice, but there are problems with certain survivor benefits. And the way that you use survivor benefits could be very, very, very important to maximizing your long-term retirement strategy. So really, it's about your unique situation and what that is to you, and making sure that you are planning ahead just to maximize that long-term strategy.
Yeah, I think when I first understood the survivor benefit, it really seemed more like financial planning to me. And I think that's what's unique about this, and why we're talking about it today, why people need to understand how that can affect them long term. So I think the first place we need to start is understanding the disability retirement annuity. Now, I don't think we need to talk in detail about disability retirement because that's a really big topic, but we need to understand if you are on disability retirement, what do you stand to make, and then see the picture of survivor benefits within that. So, Bo, can you talk to us a little bit about how much federal disability retirement pays on a monthly basis?
Yeah, sure. So first of all, our firm, this is one of the main things that we do. So we're talking about how survivor benefits affect your retirement, but specifically when we're talking about federal disability retirement. And that's one of the main things that we do for federal employees, is help them get out of their job on a federal disability retirement benefit, right? So that's what we're talking about here. This benefit is something that we've done for years, we've had over 4,500 people approved at this time for federal disability retirement. So this is one of the main things that we focus on as a national law firm, is helping federal employees get disability retirement benefits, secure that benefit for them. But digging into what does it pay, well, the first year that someone would be on a disability retirement benefit, it's going to pay 60% of the high 3 average. That's for the first year. And for every year after the first that they remain on the benefit, it's going to pay them 40% of their high 3 average. Now that lasts all the way into the age of 62. And when you get to the age of 62, that benefit, the disability retirement benefit, will recalculate and turn into a regular retirement pension at that time.
So a lot of people are probably thinking right now, what is the high 3 average? So can you explain that real quick?
For sure. So the high 3 average is pretty simple. It's basically the 3 consecutive years that you as a federal employee earned the most money based upon your salary. It's not, it's not really talking about holiday pay or overtime, that kind of stuff, but just your base salary, the 3 consecutive years that you earn the most amount of money. They take those 3 years and they average them out, and they come up with what's called the high 3 average.
Yeah, so most people will find that their high 3 is their most recent 3 years of employment.
Usually, yes.
Usually.
Yeah.
But that's not always the case. So it's important to know that. You can get that information on your SF50 if you request that with your agency. So to make this clear for everybody, let's look at this chart here. We're going to look at the annuity and how it pays out, and just to make sure that everybody's on the same page and it's clear to everybody what it looks like. Bo, can you give us an example of somebody who had a high 3 average of $100,000, just so we have a nice clean number to work with?
Sure, I think that's a good idea, and at 100,000 is a good round number, especially with the percentages. But just, I love this slide here because it visually represents what that might look like when you're on disability retirement. So we've got the high 3 average, and we're using $100,000 as the example. So obviously 60% of that is $60,000. So in year one on disability retirement, you'd earn $60,000 that would be paid to you monthly. Okay. And then again, for every year after the first year that you remain on the benefit, it's going to be 40%. So that would be $40,000. Again, that's taxable earned income. And that's going to come to you in a monthly installment all the way into the age of 62, as I mentioned earlier.
Yeah, so you can see this as a really big benefit. It really allows federal employees to secure income into the future until they get to regular retirement. There are some other additional aspects to this benefit that we're not going to talk about in this webinar. We have some webinars that go over the disability retirement benefit in detail. Those are earning money in the private sector, credible years of service. So there's some other things that you need to be aware of. But for this, we just wanted to point out the main points that apply to the survivor benefit. So the first is that annuity. One thing that's really important to our clients is being able to maintain health and life insurance while they're on disability retirement. So can you talk about that real quick?
Yeah, you're exactly right, Nick. I completely agree. This benefit is very powerful for a lot of federal employees. If you want to learn more about it, I really encourage you to go check out those other webinars that dig into the specific benefits of federal disability because it can be life-changing to a lot of people. But for this topic today, the maintaining health and life insurance is a critical part of this, and a lot of people use survivor benefits in conjunction with that. The main takeaway is that you have options to keep your health and life insurance when you do get approved for disability retirement.
Okay, so hopefully that gives you a real quick snapshot of what federal disability retirement can offer. Let's get into understanding the survivor benefit options. So there are 3 options here that I want to have Bo go into and give us some examples of each one of those. So Bo, can you talk to us about those 3 survivor benefit options?
Sure. So just to start off with, let's take a quick minute to understand what a survivor annuity is. It's a way for you to choose a reduction in your benefit, your retirement benefit. You choose to take a less amount of money in order to leave a financial benefit to a surviving spouse if you were to die before your spouse did. So it's a way to choose a reduction of your retirement, your monthly annuity, to leave something back for your surviving spouse. And again, it sounds like a really nice thing to do. We all agree on that. But there are reasons to do this, and there's reasons not to do this. And it's all based upon your individual unique situation, and especially what your plan is for your retirement. So speaking of those reductions, there's 3 options that you have in choosing a survivor annuity: the maximum survivor annuity, the partial survivor annuity, and then the no survivor annuity. And we're going to dig into each of these real quick, so you get a better understanding kind of what they mean and how it would affect your benefit, your annuity. And again, we're talking about disability retirement, so how this affects your disability retirement annuity. So let's jump into maximum survivor annuity first. So basically, this is a reduction of 10% of your disability retirement monthly annuity. And in exchange for reducing your benefit by 10% that you would get during your lifetime, you're going to leave your spouse with 50% of your unreduced monthly annuity. So meaning that if you die before your spouse will be left with 50% of what your normal annuity should have been in exchange, again, for that reduction, that 10% reduction, because while you're getting the benefit, it's not 100%. You're getting 90%. So that's the maximum. It's a 10% reduction now during your lifetime, during your annuity payments. So let's use a quick example to help explain what I'm talking about. If your unreduced annuity was $1,000 a month, let's just say, to take a maximum survivor annuity, it would be $900. That's that 10% reduction. So during your lifetime, that annuity would be $900. If you were to die before your spouse, then your spouse would be left with 50% of the unreduced annuity, which would be $500 per month.
Yeah, so what Bo is saying there is really important, because that means that you are going to leave your spouse half of your annuity for the remainder of their life. So that's really big. So now that we have the idea of the maximum survivor annuity, let's talk about the partial survivor annuity. How's that different?
So it's just different. I mean, it works the exact same way, but it's different in the percentages. So rather than 10% like we have with the maximum reduction, it's only going to be 5%. Okay, so it's half of that. So again, with my example, let's say that your monthly annuity was $1,000. Well, now it's going to be $950. Okay, so it's only a 5% reduction, but it's also a lower survivor annuity benefit to your surviving spouse. It's not 50% like the maximum was, so it's 25% for this option.
So what you're saying is if I chose this option, my spouse is going to receive 25% of my annuity for the remainder of their life, which is $250.
That's exactly right.
All right, so the third option is really no survivor benefit. You can elect to take no survivor benefit. So why would somebody choose this?
That's a great question, and a lot of people ask us that, and we do our best to try to answer it. The highlight is, well, it's an unreduced annuity now, right? So you're not choosing a reduction. You're getting the full maximum unreduced amount of your annuity. Your disability retirement will be what it should be. It won't be reduced. A lot of times people think of survivor election benefits, survivor annuity benefits, as a form of life insurance. And typically we don't like to think about it that way. So one example of somebody who wouldn't choose this is that, they might have several life insurance policies or enough life insurance in place to cover their spouse if they were to pass away before their spouse. Right? So people choose this for multiple different reasons, but one of the reasons that we see the most is if they have enough life insurance in place or enough other security for their spouse if they were to die, then they don't need this. So they want to maximize their survivor annuity while they're alive.
Yeah, you're exactly right, Bo. So one caveat to this I want to bring up is that if you do choose this no survivor annuity election, your spouse will not be eligible to continue receiving health insurance after you have passed away. So that's a really important point that I just want you to talk about real quick.
The reason that that's so important is if your spouse cannot get health insurance on their own through another form of insurance, then that's exactly a reason that a lot of people would use to make the election for some sort of a survivor benefit, because they know that if they were to pass away and potentially their spouse would lose their rights to health insurance, right? So if you choose a survivor benefit, either maximum or partial, your spouse will be left with the option to continue health insurance benefits. If you choose a no survivor annuity option, then they won't.
Yeah, so that's really important. And while we're talking about that, now that we've looked at the three options here, if you take partial survivor annuity or no survivor annuity, your spouse has to be aware of that. So they ask for proof of that. So your spouse has to sign a form and then have that notarized in order to elect either one of those options. So now that we've talked about those three, let's talk about who qualifies as a survivor, because this is another really different and important point here.
Yeah, this question comes up a lot too. The purpose of disability retirement, the spouse is the qualifying survivor. It has to be the spouse. That's the only person. It's not your grandchildren. It's not your church. It's not your dog. It's got to be your spouse.
Yeah, and that's where this is different from life insurance, right?
It's way different than life insurance in that way. There are, with a typical life insurance policy, whether it's term or whole life or a number of different kind of life insurances, you can choose beneficiaries, multiple beneficiaries, right? With this benefit specifically, we're just talking about your surviving spouse. And another potential problem with this, and why you don't want to use this as life insurance, is that if you were to outlive your spouse, if your spouse were to die before you die, then there's no benefit. Because again, there's no other beneficiaries that you can choose.
Yeah, all that money that you had just reduced from your annuity just evaporates.
It'd be wasted at that point in time. Yeah. So if you are choosing this only to use it as a form of life insurance, that's a bad strategy. Unless you're uninsurable in the private sector, right? Maybe you can't get life insurance, and maybe this is the best chance that you have to leave something behind. That's one idea. But if you are insurable, it's definitely worth taking a look at in the private sector to see what options there are for more of a typical life insurance plan or policy, which leaves you with a tremendous amount more of options than just your surviving spouse.
That's great. I mean, that's really, really solid information there that people really need to be aware of, and they're not aware of in these situations. So let's talk about another small detail of this survivor option, which is some terminating events. And people have a lot of questions about these. So let's just try to understand them a little bit. So, Bo, can you talk to us about those two?
So it's really important to know what would terminate this benefit, the survivor annuity. There's three things specifically that would do that. One is the death of a spouse. An election of a survivor annuity will terminate immediately upon death of the spouse. That's an example that we just used, that if your spouse were to die, the benefit would be over. It would cancel and it wouldn't be in place anymore. The other example is a divorce. If you get a divorce, you have the option to then cancel that survivor benefit election. You don't have to. You can still leave your former spouse there as a surviving spouse, but you can also terminate it at the time of the divorce as well. And lastly, there's a remarriage event here. So if you did leave your survivor as your former spouse and they were to get remarried before the age of 55, then that would also terminate the survivor benefit election then too.
Yeah, and so if you run into any of these situations, it's important to know that you have 2 years to make a new election in any of these situations. So keep that clock in your mind. If you did run into any of these situations, you have to make a new election within 2 years so that you can decide what you would do with your annuity upon your passing. Okay, so Bo, let's talk about important factors to consider when making this election, because how do people think about whether they should choose this option, that option, private sector life insurance options? How do they go about that when making these considerations?
Yeah, well, like you said earlier, this is a lot more like financial retirement planning, right? You're trying to make decisions long term that's best for you and your family, but also that maximizes, I keep using that word, maximizes your retirement, maximizes your benefits, because there are things that people accidentally choose because they're just not educated enough on what these options are and how you should use them together, or how you should deny to refuse some of these things and combine them with different things, right? So there's just a lot that goes into these decisions, So we want to encourage you not just to wing it, right?
Yeah, it's really situational.
It's very
I mean,
situational.
there's a lot of options out there, but it's totally dependent
Yeah.
upon your situation.
But specifically, yeah, it depends on how old you are. I mean, obviously, a person who's taking a disability retirement in their 40s or 30s or even in their 20s, they might have a lot different philosophy in terms of what their future looks like than somebody who's in their 50s,
Yeah,
right?
and they might even have a difference in a bigger age gap between them and their spouse that might come into play too.
Exactly. So gender plays a part, health history, which is kind of like your insurability, right? Do you have health insurance? Could you get health insurance? Do you have life insurance? Could you get qualified for life insurance? Sources of income is a big one. What does your financial future look like? How how secure are you in terms of your need to meet your daily living expenses?
Yeah, and with that, don't forget we mentioned that on disability retirement, you're able to make money in the private sector. There's a cap on that, but that could play into your election here, your election options.
Yeah, so there's a whole array of things that you need to consider for sure. And I would strongly suggest that, like I said before, don't wing it. I think you need to really, consult with somebody about this to ensure that you're making the right elections.
Okay, so with all of that we just covered, there's a lot of details, there's a lot of nuance. It's very situational, like we've said. But let's cover the key points here, so that as people leave this webinar, this is what they're taking with them, so that they consider these things when they're making these elections at retirement. So you have three options: the maximum survivor annuity, the partial survivor annuity, and no survivor annuity benefit. So you need to think about those three things. You need to talk to a professional and determine which of those are the best options for you moving forward. One of the other really important aspects of this benefit is that it's different than life insurance. You can only leave this to your spouse. You can't leave it to your grandchildren, your children, your friends, your dog, the charity you're involved with. This is only going to your spouse. And so if your spouse passes away before you, the reduction you took in your annuity is gone.
Yeah, Nick, let me give one more thought there because I really want people to understand this. Back to the reduction, let's just say that somebody did the maximum again, right? And that was the 10% reduction. The example we used was, they would normally get $1,000. Now they're going to get $900. That's 10% reduction. So for that $100, could you possibly go out and get a life insurance term policy for $100 a month? And if you could, and you're using this as a form of insurance, life insurance, then you'd have a lot better options there. It wouldn't just be your spouse, number one, and it wouldn't be gone if your spouse were to pass before you, right? So think about it in that sense. Don't just think about this as a way to provide life insurance, okay?
Yeah, and in that case, most federal employees' annuity in this situation is going to be higher than $1,000 a month. Yeah, their high three average is going to be significantly higher than that to pay them out. So you most likely have a larger portion of money to use towards a private sector option there.
Again, yeah, exactly right. But remember, some people are not insurable, right? So before you make that election, consider that fact. We talked about that when we said important factors, but keep that in mind. Your health, your ability to get life insurance is a big part of that too.
So insurability, that's a really important word, a really thing to consider. If your spouse is not insurable, you need to think about the options that you're choosing. Likely need to choose a maximum or partial survivor annuity, because the no survivor annuity option would take their health benefits away after your passing. So the next point is, in some instances, your former spouse is able to be eligible to receive a survivor annuity. So just think about that. And then the final point we want to make, and it's something we haven't mentioned yet, but is very important, is that once your disability retirement has been finalized, this is after approval. So you go through a final process with OPM to finalize your annuity and all of the details of your disability retirement. Once that has happened, you have 30 days to make changes to your election. So if you've made a choice here, you could make a change to that. So Bo, can you talk about that as we're wrapping up here?
We help a lot of our clients through this process. And of course, they have to make these decisions during their application process for disability retirement. But then it could be months until they even get approved for the benefit. And then it could be months that they're on an interim payment status, right? So it's still not, you're approved, but it's not been finalized yet, right? So you haven't gotten to the finalization of that benefit. So what Nick's saying here is that once you get to that point, once you get through the interim payment status and they finalize your disability retirement annuity, from that point, you have 30 days to make changes to the elections that you filled out with your application forms, okay, which were done months ago, right? So it's important to just, know what you chose, make sure it was good then, but maybe something changed between now and the time that your disability retirement gets finalized, right? So that's a good point to make. The 30 days from the date of the finalization, not approval necessarily, the finalization of that disability retirement.
So that 30 days Bo's talking about is really important, because after that, your options are locked in and there's no changing them after that. So make sure you know the best option for you before you get to that point. Okay, so we know that was a lot to cover. So hopefully you can see how important this topic is, how it can make a big difference in your annuity, and make a big difference for your spouse and your future. We help our clients with this every day.
That's right. Yeah. When we have clients that hire us to help them with the process of federal disability retirement, the application, the representation of that benefit, it's important to us that they understand what they're getting into and the options that they have, the choices that they're making, and what that means to them long term. We want every client here that hires us to understand how to maximize their benefits to the best possibility, and that sets them up with the best chance for success in terms of moving into this different category, this retirement category, this federal disability retirement benefit.
The overarching theme of what the way we try to think about it is security, right? We want to help our clients find security in the future. They may be in a situation where they don't feel financially secure, physically secure, any of those things. So we want to help them see a brighter future, see what their options look like, and help them set that up the best way possible, right? We've helped over 4,500 people do that so far since we've been doing this. And that's growing every day, and we've done it at a 99% success rate. That's not a sales pitch. It's something that we're really proud of.
Yes. And again, we are successful with these claims. The 99% success rate is right. But another thing that's different about us is that we truly understand how different options are going to affect your long-term plan and your strategy towards retirement. I don't think most law firms get into that, and that's something that we actually really want to be helpful to our clients with.
Yeah, I do feel like we're unique in having that long-term financial planning aspect to what we do. So with all of that being said, we're going to leave the chat open here for just a little bit longer to answer questions. We'll try to get to as many as we can. If we can't get to your question, please give our office a call and set up a free consultation where we can go more in depth with you, look at your situation, find the best options for you moving forward. Bo, thanks for being here, imparting the knowledge that you've accrued over the last 20 years of doing this.
Absolutely. It's been my pleasure. One other thing too, Nick, is I would encourage people to go to our website. There's a lot of other information on the website about retirement benefits, about options that you have within your retirement benefits too. So there's a ton of resources there that I'd really encourage you to go take advantage of.
Yeah, and we put a couple of these webinars on every month. We run a YouTube channel where we put these after we're done, so where you can get all the resources you need to find the best options for you. So we're always here to help, happy to help, look forward to helping federal employees. You guys serve us, and we want to be here to serve you. So with that, let's wrap this up, and we look forward to seeing you next time. Thanks.